A digital bank is a fully online financial institution, no branches, just apps and websites. Also called neobanks or challenger banks. They offer check-in, savings, loans, investments, or BMOB, licensed like traditional banks, for example, FDIC insured in US, or partner with them, for example, Chime with Bank. Key features: 24/7 access AI chatbots for support, seamless integrations with apps like budgeting tools. Examples: Revolut, Global, Monzo UK, Nubank, Brazil, serving millions without a single teller window. Pros: lower costs mean higher interest rates, no fees. Cons: no cash deposits, easily, potential tech glitches. Neobanks, digital first, challenge traditional giants like Chase or HSBC. Differences: structure: neobanks are agile startups. Traditional have legacy systems and branches. Costs: Neo, low overhead equals free accounts, high savings APY, for example. Ally at 4%. Traditional, fees for everything, lower rates. Innovation: neobanks, AI personalization, crypto integration, for example, Sophie. Traditional, slower to adopt, but catching up with apps. Customer focus: neobanks target millennials, Gen Z, with gamified apps. Traditional serve all, with in-person service. Regulation: both regulated, but neobanks often use banking as a service partners. Who wins? NeoGrow FastChime has 30 meters users, but traditional hold 80% market share with trust and scale. Hybrid future: many traditional launch digital arms, like Goldman Sachs. Marcus: building a mobile banking app is complex security first. Steps: planning, define features login, transfers, bill pay. Use UX design for intuitive interfaces. Tech stack: front end, React Native for iOS, Android, cross backend, cloud like AWS, Apis for integrations, for example, Plaid for linking accounts. Security: biometrics, fingerprint, Face ID, encryption, tokenization, compliance with PCI DSS, GDPR features, real-time notifications via push, AI for fraud detection, for example, machine learning models, testing and launch, beta tests for bugs, regulatory approvals, updates via app stores. Cost: $100,000, $1 million, plus, depending on scale. Open source tools like Firebase speed it up. Behind the scenes, microservices architecture for scalability handles millions of users without crashing. Branchless banks cut costs, massively rent, staff, maintenance. Reasons: digital shift: 70% plus of banking is now mobile. Branches are dinosaurs for most. Efficiency: online ops mean global reach without real estate. Ally Bank serves US-wide from HQ. Target audience: young users prefer apps. Branches cater to older demographics. Profit margins: savings pass to customers higher rates, no fees attract depositors. Partnerships: use ATMs, for example, Allpoint Network, or retailers for cash needs. Downside: harder for cash-heavy users or those needing advice. But with video calls and chat, it's closing the gap trend. Even traditional banks close branches across US 3,000 plus closers in 2020s.
Yes.
But it's tough, many burn cash first. How they make money: interest spread. Lend deposits at higher rates than they pay, for example, loans at 5%, savings at 1%. Fees: premium features, for example, Revolut's metal card subscriptions. Interchange: from card, spend 0.5 to 2% per transaction. Upsells: investments, insurance, via partners. Success stories: Nubank profitable since 2021, $1 billion revenue. Chime hit profitability in 2023 via scale. Challenges: high customer acquisition costs, $200 to $500 per user. Competition: many like N26 struggle in new markets. Overall, mature ones. Yes, startups often VC funded for growth over profits. By 2025, global neobank revenue tops $700 billion. Not fully, but they'll dominate. Why? Adoption? By 2030, 80%. Banking digital. 人外箱子. Branche. Innovation edge. Faster features like instant loans via a cost advantage. Traditional overheads unsustainable. But traditional strengths. Deep pockets for acquisitions. For example, Capital One buy-in. Discover. Regulatory trust. Corporate services. Likely. Coexistence. Traditional go. Hybrid. Acquire neobanks. Full replacement. Unlikely soon. Physical needs persist for some. Prediction. Digital banks. Handles every day. Traditional for complex mortgages, wealth management. Fintech wins the mass market. If you found this video helpful, please subscribe, like, and share. Let us know in the comments what topic you'd like us to cover in the next video.